Morning. It's the Ambassador, 9 o'clock on Monday the 8th, and we're seeing emerging markets somewhat mixed, trending lower here, despite the fact that the dollar is slightly weaker. But overnight in Asia, China down 14 bips, India up 13 bips, and then South Korea down 91, and Taiwan up 4 basis points. Into Eastern Europe and the whole European story, which is really what continues to put the most pressure on global markets. You've seen Russia weaker with oil prices. They're quite volatile here, but rebounding a bit in the last hour despite being down about 2% at this point. You've seen the central part of Europe actually rallying and their currency is somewhat stronger as there's a better bid to the non-Southern European credits, in other words, the Eastern European credits, even Austria, and some of the fringe of the core getting some implicit guarantee type talk out of the ECB. But the story in Turkey and then the story in Greece and the other Southern European markets continue to be weaker, with CDS weaker across the board. In fact, Turkish CDS is at 5-month wide. So we continue to watch that story. The euro getting a little bit of a break this morning, despite the fact that the G7 meetings in Canada did not yield any particular policy announcements on what we're going to see there. Into Brazil, opening up 29 basis points higher. Chile up over 1%. So strong moves in Latin America this morning. Watching some earnings out of some of the core players over the next couple of days. And South Africa up 59 basis points with good operating profit numbers coming out of Harmony, and watching some of the other gold companies. Broader, I think the S&P needs to get over 1085 for that hard reversal from Friday to really have legs, and for many to say that the lows are in. If you look at the emerging market index, the MXEF, which is the core index we're all following, is about 2.5% away from the 200 moving day average, which is a very key level of support. But on a technical basis, right now it looks oversold, whether you're looking at it on an RSI basis or you're looking at it from DeMarc's. A number of technical indicators say things are oversold, but the index needs to bounce off of the 200 moving day, and I think at that point you could start to see some follow through. Have a note out this morning on the site that talks about how there's actually a handful of global equity strategists, emerging focused, that have come in today to say that this pullback is oversold. There's a lot of parallels to 2004 when you had China comments, and you also had a couple other macro elements which saw the markets come down 5 to 15%. So keep an eye on that, but people are definitely more constructive this morning, and we will talk to you soon. Thanks.